Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, and it is late morning on February 10th, Friday, before Super Bowl Sunday. I hope everyone has a great weekend. So after a good 4 or 5 weeks or whatever to start the year, we finally hit some selling this week. It's not a huge wave, but we are seeing, small caps are down maybe 3 to 4% on the week, which is pretty large. Big caps more like a couple percent. And just some resistance showing up, a little bit of sloppy action, that sort of thing. Listen, we lived through last year just like everyone else, so I'm not taking anything for granted. I'm not whistling past a graveyard or whatever the metaphor is going to be. Our antenna's up just to see if, things can hold in there. At the same time, we're also investing based on the evidence, and at this point, nothing's changed. In fact, from a top-down perspective, everything is really positive. The intermediate term trend is positive. It's not straight up, but it's pretty positive. The longer term trend turned positive by our measures. Everything's living above longer term moving averages. The broad market's healthy. The 2-to-1 blast off indicator flashed a month ago. And we're not seeing a rush into, defensive stocks or the Dow or stuff like that. That's a little bit of a yellow flag. At this point, that all still looks good. It can change, and if it does change, will change. But so far, so good. If you did want to throw a rock at the rally, it would be there really isn't that much leadership yet. I mean, there's a lot of stocks that are doing pretty well, but there's not like 2 or 3 or 4 real themes or liquid leaders that are doing well. To this point, a lot of leadership is still cyclical, which can be choppy based on whatever economic report or Fed head speech comes out that day. But even among those stocks, I'm not really seeing any abnormal action. So listen, if you cannonballed into the pool and bought a bunch of speculative stuff, yeah, maybe you pare back. If you haven't done any buying or very little, yeah, maybe you do a little nibbling here on this dip. But if you've been doing what we have, which is sort of stepping, not slowly, but steadily into the market, but still have a decent chunk of cash, for the most part, we just watch what you own, watch things that are on your watch list, and just see how it goes. Right now, color me optimistic, but certainly not complacent. We'll see how it goes. But right now, I am optimistic just because the indicators remain positive and the action still remains overall constructive, okay? All right, let's hop on the charts as usual. I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So here's the NASDAQ, as we usually start with. And again, you can just kind of see we've pulled back here. It's not pleasant. There's been, 1, 2, 3 kind of, I guess I'd say sloppy days, kind of they start bad, they just kind of keep getting worse, or, they start good and they just get worse all day long. So, there's a little bit of, I guess, resistance up here from whenever this was a few months ago. I'm not big on that. But overall, when you just back the chart out, we're more trend people. We're still above even the 25-day line, which is this green line, above the 50-day line, which granted is kind of way down here. But we're still even on the NASDAQ, which is the weakest major index or the one that hasn't caught up enough as much. It's still above the 200-day line, okay? S&P 500, same sort of thing. Is it a little sloppy in here? Again, a few bad days, volatility, yes. But still even above its 25-day line. As I record this, who knows how we close. The market opened down, 20 points on the S&P. Now we're flat type thing. So a little bit of support showing up, but still above all the moving averages. And even the things that have gotten hit, like, actually, let me use the IWM. This is small caps. This has been sloppier, this sort of action where you kind of break above obvious resistance. This is why I don't like breakouts in indexes, but in this case I used it because it was kind of an intermediate term call, but you'll often pop up and then come right back down because it's so obvious. But either way, we're still again above the 25-day moving average. We're still above where we were a couple weeks ago, that sort of thing. I don't love the sort of this and then back down. That's not my favorite action, but that's more of like a anecdotal evidence as opposed to just looking at it and say, well, the intermediate term trend remains up. It's all these things are all above their 25, 50, and 200-day moving averages. I mean, just to run through, MDY, this is mid caps. Again, sharp pullback, but above all these moving averages. In fact, you're starting to get the 200-day line to kind of turn up on some of these, which is not the worst thing, okay? So anyway, from a trend perspective, we'll see how it goes. You come in next week just to clean up this chart and we implode on some news or whatever happens. I'm not saying it's the end of the rally or it's, bear market 2022 all over again, but yeah, that would be like, okay, there's still some sellers to chew through here. Clearly people are selling out there. But at this point, to me, this looks like a normal shake the tree event after these indexes, in this case, went from 440 to 500, and now here we are at 480. From 44 to 50 back down to 48. seems pretty normal to this point, and that's how I would advise you to play it. Again, assuming you haven't, you're not like fully on margin in a bunch of different things, okay? The other thing I was just going to point out here is just, again, the XLP, which I like to look at. Every time we pull back, it's kind of like, are we being led by the XLP, or is it participating in the downside, or is that kind of going up while everything else is going down? And in this case, I mean, it's outperformed here for a couple of days, excuse me, but at the end of the day, the XLP is not doing anything. If anything, it's obviously drastically underperformed this year, and it's not really doing much. And I just find it interesting. Same thing. Excuse me, I got a frog in my throat. You had the Dow kind of leading and the XLP leading this October, November, early December rally. And look at the Dow. It can't really. This is the DIA, the ETF, but it hasn't been able to really get going yet. Now, I'm not saying I don't want the Dow to get going, but it's not like this is leading the way higher. You can see the relative performance line has been underperforming. A little bit of a bounce here, but way too early to say anything. So, we'll see how it goes. But I think overall, the evidence is still positive, especially from a top-down perspective. So I'd rather go with that than, just memories of last year. One thing before getting into stocks is just when you're playing, I've mentioned this, 500 times, but when you're playing off the bottom stuff, this is square, block, square, whatever you want to call it, SQ. A lot of these things will, say it's a new bull market. I'm just for argument's sake, you will get a lot of these things to, at the very least, bounce for a couple of months and, have some pretty good gains, not just from the lows, but they'll kind of break out of like low level things and go up. So, here's Square, it got destroyed, and then it kind of bottomed out here for whatever months. Just know that when you're dealing with these things, there's just still a ton of overhead to deal with. They're super volatile, and they're not the same stocks they were in terms of leadership, institutional quality, buy on the dip. It's totally changed character. It's like a totally different stock, and you have to treat it like that. And I'm not picking on Square in particular, but when you're buying these things, again, I'm not going to say that this move right here is some completely abnormal, but just realize you're dealing with like yesterday, Square was down, 6%. That's not that bad, but we're down from, say, 90 a few days ago to 75. So that's, whatever, 16% or 7, whatever, just in a few days. So you just have to use small positions and just know what you're dealing with. If you're going to play these things, just know they're going to be super volatile. They're not the high quality players that they were years ago, most of them, that sort of thing. Even names that weren't old leaders, like this is GitLab, kind of tried to, again, kind of break out. But since then, it's just gotten, this is a name I like fundamentally, but 58 to 42 in a few days. I think they have layoffs, but it wasn't like they had earnings or anything. It just kind of imploded. Yeti, which is, the, drinks or whatever. I guess it's not summertime because no one's buying them, but like, had this nice earnings move here in November, looked like it's bottoming out, kind of tried to break out, and then just, this isn't Mr. Volatile, but, 48 to 40 in just a few days. So if you're playing the off the bottom stuff, you can just know that is still like dealing with all sorts of resistance, and, it doesn't have quite maybe the numbers. If you're just doing that, then treat it more as a trade, in my opinion, or trail a stop. Just make sure you don't get hurt, because when the market, even as you see here, has a little bit of hesitation, a lot of these things can fall 15 or 20% just in the normal course of business, okay? I just wanted to mention that because you are starting to see some of these things come off. And it's not just like GameStop. It's some of these names that are, Yeti's a real company, makes a lot of money, but the stocks can still jerk you around pretty good, okay? Right now, I'm still looking for mostly, in this environment, mostly pullback buys. So I'm going to stop mentioning the airlines at some point just because I don't want them to fail and it be like, oh, Mike, you were really high on the airlines. It's just an interesting chart. A lot of these things have, obviously they're the dog's dinner for years. This is American Airlines, bottomed out, had this huge volume for a couple of weeks. And now you have 4 weeks in here. I wouldn't say tight per se, but it's not giving up any of its prior gains to this point. No selling volume at all. You can see down here. UAL is another one, kind of tagging the 25-day line right here. So in a sense, you could say it's a little bit weaker than the market, right? The market's most indexes were above the 25-day line. These are hitting them, but overall, I just look at this as like, hey, they haven't gone down at all. And other travel stocks like Hyatt and Hilton, reported good numbers this week. Hilton did. So just some of these like cyclical, really deep cyclical names, maybe like the airlines could be interesting. Jabil Circuit's another one. Again, you're not going to go brag to your friends about this, but JBL, this was in top 10. You can see it's not crazy volatile, although it makes progress over time for sure. But nice big base in here, call it a year-long consolidation, breaks out. I think the second week of the year, you can see big volume here. This is when cyclical stocks kind of went straight up. And on the daily chart, it's had one little, pullback here, come back up. And I'm just mentioning it here, not because it's, an ideal buy right here, but, just if you do get a little shake the tree action, you pull back here, maybe intersect with some moving averages. United Rentals, full disclosure, we took our profit in top 10 up here. So I'm not saying up here, but first of all, the stock hasn't gone down at all, even as the market is. But if you do get a consolidation here, you check back in 2 or 3 weeks, hey, this looks pretty good. Or there's some, economic worry hits the tape and the stock, falls 8% over 3 days, but just to a 25-day moving average, that could be an opportunity. In the medicals are, a lot of the biotechs and medicals, I was pretty optimistic that we'd get a lot of leadership there. And they looked pretty good, but it's almost like I don't want to say they led last year because nothing was really going up much, but it's almost like they had a pretty good move or relative strength anyway for the second half of last year. And now a lot of them are just kind of hanging out. Penumbra's a different animal. They have some new product launches. Call it whatever you want. It's kind of a breakout here, but really no, look at the weekly chart. It's kind of easier to see. There's really been no pullbacks here since this huge shakeout back in November, I think it was. But you have like one little dot here, one little red dot here, a little red dot this week. The idea is, ideally you do get some pullback here. You do have earnings here on the 23rd of February. But again, maybe you either wait for earnings and you get a little shakeout or it tightens up or whatever, but see if you can get some pullbacks in here. ACLS, this is interesting. Chip stocks look pretty good. Just to show you the group, this is the SMH, which isn't the be-all end-all indicator, but you can just see, relatively strong, really not much of a pullback here. I also like to look at the NASDAQ versus the XLP, but I also like to look at chips just because it's kind of that sort of thing, growth thing. But ACLS is one of a couple of stocks that I'm monitoring for as a potential new leader. You kind of see it. It did have a run here, but obviously it did nothing here with the bear market. It couldn't pull back here in December. This was this November, December like digestion in the market. And then you can just see it's really shown a lot of power here. It's not the thickest name, but it has some sponsorship here. Great sales and earnings growth. This year doesn't look super fast because chip equipment, which is what this is, a little slow down. But anyway, this is just a name I'm sort of flagging. To me, to a lot of people, it's like, well, it just went from 80 to 120, forget about it. To me, I look at this and think, hey, this could be, if this is a bull market, if this could be the first just leg up, and maybe you get some hesitation or pull back into the 10-week line, or as I pull up the daily chart, it had earnings last week. It doesn't want to pull back much, but eventually it might hack around, obviously, shake out a little bit with the market or the group gets hit or something like that. So just keep an eye on it. Back on the more boring side of things, this is Group 1 Automotive. This is GPI, auto dealer here in Britain. But just interestingly, a lot of auto dealers really have busted out of year-long ranges on good volume. Here's GPI. Very, very cheap. It's one of these plays where earnings are going down, but they thought it was going to go down this much and it's only going to go down this much, and the valuation is crazy cheap and they're buying back stock and all this stuff. And you can just see this is kind of a nice breakout, first pullback sort of thing after the breakout. So that's kind of interesting. SMCI, this isn't a pullback play. I just wanted to mention this. This looked done for, and it's very sloppy on the chart when you look at it like here, even on the weekly chart. It's kind of had these moves and then deep pullbacks, and now it's had this move, and it had a pullback here, and it reported earnings, and overnight it was down, I don't know, here or something like that. And it never got there. Obviously, this was the earnings day right here, and it's been very powerful since then. Just kind of flagging it. It's in the server space. Let's see if it can maybe tighten up. Uber getting hit today a little bit. Well, first, let me just say, I've mentioned this before, but it had this big earnings in August, I think it was, and it kind of built this bottoming base. And now we're seeing, 6-7 weeks in a row or whatever on the way up as it stands now before the close. That's pretty good. Good volume here. It's getting hit a little bit today because its peer Lyft is down, like this is Lyft getting hit today. But they seem to be, the market seems to be separating the two. Uber had its own earnings report this week, which was good. And this pullback looks totally normal so far. Again, you come in next week and it's melting down. That's different, but so far so good on that for sure. Payment stocks, or at least some of these big credit card companies. This is American Express. Am I super high on American Express? No, but does that look like it wants to go down? It does not. Discover Financial, not quite as powerful, but here's this huge shakeout on earnings, big up, and then again, just a nice tidy pullback. So these just look like pullback buys. I know they're not. Listen, I'd rather it was 2020 and we're buying cloud software, but this is what the market's handing us here. Oil equipment has been touch and go, but interestingly, the drillers, which granted are a little bit pretty much at the bottom of the food chain, like them and like sand companies. But a lot of the drillers look good, and some of them literally have just come public again after going bankrupt. This one's a higher quality one, Valaris. You can just see, kind of a consolidation in here, break out, retest, go up. I don't think it's, smoke up a chimney here, but this is one maybe on a dip. And just a couple other names for pullbacks here. This is Pulte. You could look at any home builder. They got a little bit, to me, a little bit short-term out of trend. PHM, it sort of stair-stepped higher, showing relative strength, and then straight up gaps up on earnings. And now it's kind of deflating a little bit. Wouldn't surprise me if the group calmed down a little bit for a week or two or three or anything like that. But again, maybe just keep an eye on some of these into moving averages, or, if the moving averages catch up. And last but not least, I think I mentioned this a couple weeks ago, is Boot. This is Boot Barn. Nice story, nice retail story. Again, earnings are kind of flattening out, but they thought it was going to go down more. The stock had a giant run during the pandemic. It's a little bit like Crocs, if you remember. Huge run, pretty persistent, very persistent. And then, pretty big decline in here. But it has kind of bottomed out in here and shown some real big accumulation. Earnings are out of the way for this fourth quarter. This was the earnings reaction. And again, you just kind of have, I don't want to say nothing. I mean, it's from 88 to 80. If you bought it at 88 and you're down 10% or whatever, you're not feeling good. If you look at the chart, that looks totally normal. There hasn't really been much selling pressure here, so that's another one. Just back to the general market again. Last year it was kind of like, I think there was 25 days of fewer than 40 new lows all year. This year there's been more than that. Last year, obviously, the intermediate term trend was mostly down. There was periods where it was up, like around here. But they tended to be relatively short-lived. The longer-term trend was down for 11 plus months last year, and therefore we were holding a lot of cash. I mean, we were just waiting. Now the evidence has changed. Could it change back again? Yes, it can always do that, but you'd rather go with what you see, and so far, so good. I wouldn't be, personally on margin or anything like that. You can run your ship how you want to. But I still think in general, the market acts healthy. This pullback was not totally unexpected, a little bit hot and heavy here. And let's just see. I would guess there's probably, this is a total guess, a little bit more short-term pain. Maybe some rotation, some things that look good don't look good, some other things get going, that sort of thing. But overall, when I look at this, my mind is, I'm flexible, but I'm also optimistic just based on the evidence that's at hand, okay? That's all the time I have for today. Again, have a great Super Bowl weekend, and we'll be back again next week for another Cabot Weekly Review.